It's Friday, February the 17th, and we're already a month and a half into this year.
It's flying by.
Unbelievable.
It's flying by.
Unbelievable.
This week, more information, more data came out about inflation that in the last 2 days has kind of turned the market.
Producer price index was up higher than anticipated, and we've had two of the Fed presidents say that they think that they should have gone on 50 basis points versus 25 in the last meeting. And I think both of those are holding out for 50 basis point increase for the upcoming rate increase, which is in March.
We have been telling you that this rate increase would ultimately show us a 5 spot in the short-term treasuries, and as of this morning, we see that happening.
Yeah, the six month Treasury bill is at 5.04 this morning, so we did breach the 5 number.
The inflation numbers came down ever so slightly. The market wanted it in January's numbers. They anticipated it to come down to 6.2 from 6.5. It came down to 6.4. So it did come down, but the anticipation of 2/10 of more basis points turned the market upside down. The consumers' numbers were hot again, and then the statements by the Fed all indicate it's a head scratcher, folks, that the market finally is getting the word that the Fed is going to continue to push interest rates and get their inflation number down to 2%.
Yeah, and the consumers is really being topped off, if you will, because the credit card debt now is at $1 trillion, which is a record. I just think they're going to run out of money to spend. So when the consumer stops spending, that's 70% of the economy. That's when you're going to start to see some real slowdowns.
In an analogy that hopefully might make a little bit of sense, a horse analogy. If you take a horse out of the stall and you saddle them up and you're ready to go, the wise thing to do is to get them in the arena and to do some groundwork with them and work up a little bit of a lather, work off an edge on the horse and get it calmed down a little bit. That's where we are with the market at this point in time. It's not time to jump back in the market, but we are moving towards that.
We know what we're going to buy.
We know what we're going to buy.
Yep.
We're participating in the Treasury bills. We got money coming up next week that is going to renew again on around the 23rd. We got March money. We're still taking advantage of where these rates are, but we know what we're going to buy, and it's moving close to get into the big arena back into the show. So we're taking our time and being cautious for you, but taking advantage of what has been presented to us of good, strong rates, and that's where we are at this point in time.
Because it is your money.
And your money matters. Call us if you got any questions, and we'll be back next week.